G'day everyone, welcome back to Pete's Investing. It's July 14, 2023. This is the New Zealand US dollar currency update. We're bullish on our weekly, bullish on our daily. However, we may have hit a key resistance up here, and I'll talk about that in a minute. We've also got a divergence on that hourly time frame. On our weekly, our oscillator is still below the zero mark, but it's all just ever so slightly turned to the upside. It's been running pretty flat, and that's giving us this positive or bullish movement on the weekly. On the daily, the oscillator has broken up through the zero, a couple of nice bull candles, and that's been in an upswing for a number of days now. But it's hit this minor resistance we've set on its dotted line at 64.11, and that if that proves to be effective and the price bounces down from there, we're going to make this our solid red line as our major resistance and remove this one up here. So there's no other divergence or any other showing of a major trend change there. There was a divergence, just a historical purpose. There was a bearish divergence back here versus the price. It bounced down and hit our target, just for reference. Now on the hourly, we've got a, since this is our last video at this point, we did have a bearish divergence on the CCI versus the price. It broke down and hit our target. We had a little bullish divergence back here versus the price, broke up, hit our target, and we had another bearish divergence here, broke down, hit our target, bullish, broke up, hit our target versus the price. So these divergences generally work, and as I just showed you, they worked all through the last little period on the hourly. Now I've got another divergence currently in play. This is a bearish divergence on the CCI versus the price, and that happens to be bouncing off this minor resistance, as I said, at 64.11. So what we'll do from here is we'll set up a, let's try that again, set up a, that's probably ready to go short. So the idea is to put a channel within that divergence range. So it's probably primed to go short right now. And we'll set a target between that recent low and that high. So to be very cautious and conservative in our trading, we'll set a target at the 23% level there. So potentially that's somewhere you can go short, and that'll be your target. Of course, you can place, some of these generally break lower. Some of these divergences play out and go lower or higher. But again, you can see, for example, there was a little bearish divergence. You hit the target, then it rose. So you would have been wise to take the closest Fibonacci range between that level. Here it broke beyond, between that range, it broke more than 100% of that Fibonacci level. So you would have done nicely. But again, I prefer to take a closer Fibonacci range. Between this range here, that was the target there, around a 38 to 50% level. And between this range here, that was the other probably 38 to 50% level there. So that's why we're drawing this 23 to 38% level as a target level for the New Zealand US dollar. So a couple of strategies shown here is the divergence, which are independent on every timeline, and they're not necessarily related to the trends. Or the other strategy you can use is the trend following strategy, where we've got the weekly and the daily aligned. So you take in this case, you will take long positions on the hourly, but again, just be careful. We've got a resistance forming up there, and plus we've got this divergence, which indicates a potential reversal. So to understand how to trade some of these strategies and others that have been back tested, subscribe to my Patreon page. Feel free to make a donation there. We also do weekly scans of stocks, currencies, and commodities. Subscribe, like, and share the channel. Thanks for watching, and see you in a future video.